Are the new Bitcoin ETFs a scam? Well, not really. But depending on which ETF you purchase, you will be getting ripped off. Today, I'll be going through everything you need to know about these new ETFs, including what you need to look out for so you don't get ripped off, and what you need to look out for so you get the best deal possible. But the best way to get the best deal possible is to like and subscribe to this friendly YouTube channel. Now, time is money, and I don't plan on wasting yours, so let's get into it. The first US Bitcoin exchange traded funds launched, allowing investors to buy and sell assets outside of the cryptocurrency exchanges. This is really exciting and innovative. The proshares ETF, BITO, saw one of the biggest first days on record, raking in $550 million. While the new asset class is just the tip of the iceberg, it's unclear if and when the Securities and Exchange Commission will approve Bitcoin ETF investing directly in the actual Bitcoins themselves. Does this matter? Hell yes. The reason why these current ETFs are bad for investors isn't because they're Bitcoin tracking strategies. That would actually be okay. It's how they track these Bitcoins. Rather than investing in a Bitcoin themselves, they're investing in the futures contracts.
Jordan, you're sounding like a stickler for the technicalities.
But I'm not. This is a real issue that will affect you. This future contract strategy could end up reducing your returns by double-digit figures compared to the actual returns on Bitcoin. Not only that, but the bigger these funds get, the more that lag or reduction in your profit is going to be. And yet, proshares have launched their Bitcoin ETF and it's broken records. So, is it worth investing in? Well, with these current ETFs and how they're structured, probably not. But you need to understand the full story before you make your investment decisions. And to understand if other Bitcoin ETFs will be worth it in the future. Luckily for you, this video will go through everything. So let's get into it. I feel like I need to make this point really clear. BITO and other Bitcoin ETF funds do not directly invest in Bitcoin. Again, they do not invest directly in Bitcoin. Instead, they're investing in Bitcoin future contracts. What's this mean? Well, it's really important to understand, so listen up. Futures contracts are an agreement between two parties to buy or sell a specific asset at a specific time at a specific future price. In the case of Bitcoin ETFs, that asset is Bitcoin. The date is usually the last Friday of every month. And the price? Well, that varies, but it's based on the Bitcoin reference rate, or the BRR. This is based on the Bitcoin average price over different Bitcoin trading platforms. These include Bitstamp, Coinbase, Gemini, itBit, and Release the Kraken. Investing in Bitcoin futures is very different to investing in Bitcoins themselves. Why or how? Well, Bitcoin future contracts, they expire. So Bitcoin ETFs are constantly buying and selling these future contracts. This process is called rolling, and the costs or the benefits of this rolling process depends on the future prices. When the future month's contracts are trading at a higher price than the current month, then the futures curve is upward sloping. This is a state known as contango. And unlike when my hips get moving to the tango, contango is not a dance any investor wants to be doing.
Why not, Jordan? I love to dance.
When the futures curve is in contango, futures-based strategies like these Bitcoin ETFs are forced to sell relatively low-priced future contracts and purchase higher-priced ones. Put simply, they're selling low and buying high, and investors'
Nightmare.
Of course, I should make the point here that when a futures contract price is lower than the current price, well, of course, that futures price slope is downward. This is really positive news because you're selling high and buying low. In the futures markets, this is called backwardation. So the important question, has the Bitcoin ETF futures price been in contango or backwardation? Well, so far, futures prices for Bitcoin have been in contango. And so the headline is, this is bad news for you. When futures prices are in contango, you'll be hit with an annualized cost. This cost is made up from that rolling process of moving from one contract to the next. And how bad can this really be? Well, right now, that cost is 11.8%. That's a loss of 11.8% on your money. Sounds bad? It actually gets worse. As I've said many times before, Compounding interest is your best friend or your worst enemy. And compounding here, well, it's your worst enemy. Basically, the cost of regularly rolling those contracts, well, that will compound on itself over time. I feel like I'm always doing a dance this bit, but it kind of fits contango. As a result, if the futures market is always in contango, you will experience much lower returns than if you just directly invest into Bitcoin. And today, this has been the case with Bitcoin. Since Bitcoin futures launched in December 2017, the futures curve has been in contango more often than not. As a result, futures contracts have cumulatively underperformed the spot price of Bitcoin by 93 percentage points from December 15, 2017 to October 21st, 2021. Investors relying on these future contracts for long-term exposure to Bitcoin are likely going to leave a lot of money on the table.
Okay, Jordan, but what about the future for the future contracts market?
Well, it's not looking too crash hot either. Roll costs have been a headwind for people who are investing in Bitcoin futures. And now that more and more Bitcoin ETF futures are coming onto the scene, this headwind will only get stronger and more persistent. Since BITO launched in October, the futures curve has actually gotten steeper. The roll costs at the end of the day on October 15, the last trading day before BITO launched, well, it was 9.7%. And guess what happened when BITO launched? That rolling cost went up to 11.8%.
But why is this all happening, Jordan?
Great question. Basically, the more Bitcoin ETFs that are dealing in futures contracts are creating more demand for that type of service. This is meaning more pressure on those future contracts and also meaning that investors have to look out further on the curve. This has had a significant impact on those future prices, and it could have really meaningful long-term negative impacts on your returns if you invest in these ETFs. It'll be interesting to see how this plays out with more ETFs coming online, because it doesn't seem like this is going to stop anytime soon. Okay, so Bitcoin ETFs that invest in future contracts will probably make you lose money compared to investing directly in Bitcoins. This is because the futures market underperforms directly investing into Bitcoins. Because with a futures market, there's that rolling fee of contango. These fees can get into the double digits, which has been the ongoing trend since 2017.
Okay, Jordan, but surely things can't get any worse than that.
Well, actually, they can. The more successful these ETFs are, the more it will cost investors. This is because there are limits to how many future contracts a firm can own. On September 30, 2021, CME Group announced that the limit on the front month future contracts any one firm or entity could hold would increase from 2,000 to 4,000, beginning with the November 2021 contracts. What does this all mean? Well, currently, the BITO fund, the one that just launched, they own 3,812 future contracts, which means it's 200 away from hitting its limit. Not great. And if BITO and these other ETFs keep on taking on future contracts, it's only going to get worse. Does this impact investors? Yes, in a pretty big way. Basically, if BITO and these other ETFs keep on taking on more future contracts, their limits are going to get worse and worse. What does this mean for you? More risk and more fees. How? Well, basically, when a fund starts to reach its limit of how many contracts it can have, they then have to spread their assets across different futures contracts and move further out from the current price. But when they move further out in the contract price and spread their assets across different futures contracts, well, they increase the risk of pushing the prices of longer dated, less liquid futures higher, potentially increasing those rolling costs. And the more these ETFs or funds invest in those future contracts further out and further out, the less these ETFs are actually tracking the price of Bitcoin in the current month. This can actually get to a point where they're so far out that they're completely disconnected from the current price of Bitcoin. So basically, these ETFs you're purchasing aren't even tracking Bitcoin at all. It's almost like this weird conceptual thing that you're buying that has no comparison value to the actual asset of Bitcoin.
But how big of a risk is this, Jordan, and how much does it really matter?
Well, it's actually quite a big risk, and it has happened before. The United States Oil Fund and the United States Natural Gas Fund, well, they moved out so far along with the future prices that they had no correlation to the oil and natural gas price of the day. How big of a risk is this for the current Bitcoin ETFs? Well, that's difficult to say right now because they only just launched. But it will depend on how much money they take in, how far out of the curve they want to spread their risk, and whether the CME will accommodate for more future contracts and increasing their limits. However, it's not looking great right now. And until there's more clarity, these capacity concerns or limits on future contracts are a big issue that you need to know. I might just fly in here with a quick extra point to make, and that is diversification. While adding a Bitcoin ETF will obviously give you a bit of diversification into a cryptocurrency, I have to make the point here that unlike other ETFs, which give you a really diversified strategy, such as investing in the whole S&P 500, here, a Bitcoin ETF is only investing in Bitcoin. Well, not even Bitcoin, Bitcoin future contract prices. So when you're betting on just Bitcoin alone, if Ethereum or other Bitcoins boom and Bitcoin doesn't, obviously you're not going to capture those profits. So if you're looking for a cryptocurrency ETF, these Bitcoin ETFs aren't going to give you that. Okay, that was just a quick point. Let's get back to it. So, should you invest in these Bitcoin ETFs? Well, I'm not a financial advisor, and you have to consider your personal financial situation before investing in anything. But what am I doing? Well, I don't think I'm going to be investing in these Bitcoin ETFs. Future-based ETFs are a bit of a lousy option for long-term exposure to Bitcoin. Roll costs and fund fees, well, they're going to eat into your profits and mean that the long-term returns are going to lag compared to the performance of Bitcoin itself. Capacity concerns, or how many future contracts a fund can take on, and the potential for the future prices to go so far out that they're not even tracking Bitcoin anymore, well, these are huge risks that you have to consider. I would say these types of options are left for traders who are dealing with financial markets and dealing with all the conceptual weirdness that the finance markets and secondary markets can bring. I don't necessarily think that it's best for an individual investor, and certainly not great for me. There are so many ways for people who believe in Bitcoin to invest in it. Most of them probably superior to these Bitcoin future ETFs. However, it's a simple way to make Bitcoin future contracts part of your portfolio, I guess. And just, I suppose, from a perspective of like a finance and innovation nerd, I think these are really cool because they're paving the way for other innovations in the cryptocurrency space and making these assets more accessible to investors. Who knows what will come next? Personally, if they release a Bitcoin ETF that directly invests in Bitcoin or other cryptocurrencies, I might throw my hat in the ring. So yeah, let me know in the comments. Are you thinking of investing in this type of ETF, or are you going to wait for one that invests directly into Bitcoins themselves? If you want a video on how I pick stocks or beginner's guide, click the video up top. If you also want to find out the 3 best ETFs I think are good to buy right now, check out the video up top as well. I hope you found this video interesting. I'll be posting more finance videos weekly. For me, next step, not invest in Bitcoin ETFs until there's one that trades directly in the asset themselves. And for you, check out another video here, or here, and I'll see you again soon. Basically, if BITO and these other